Hey, what's up everybody? Tuesday, July 23rd, big up day in the stock market. As I've been saying, as soon as they lifted the debt ceiling, came up with a budget deal, cleared the path for a booming stock market. Now, we have seen since March, when the debt ceiling went into effect, this volatility up 1 month, down 1 month, but the stock market had been creeping higher, which was a testament to its underlying strength. I've been telling you about that. But we needed to get rid of this reserve flow volatility, and that necessitated a lifting of the debt ceiling. We saw that. We went straight up today. Now, next week, of course, we have the Fed meeting where a rate cut is almost a certainty, I would say. And so the path looks quite positive from here. As a matter of fact, as I have been saying, and all of my subscribers know this, they have known this because I put it out every single week. If you look at sentiment right now, we are still at very low levels of bullish sentiment. We are at very high historical levels of neutrals. The neutrals, I have said, that was the key to focus on. I said eventually you would see the neutrals come off the fence and go into the market in big numbers, buying at much higher levels. They will be the ones, or they would be the ones, to drive the market higher, and that's ultimately what we will see. The bears are slightly below average, but not at any extreme low level. That will happen. So we're going to get the bulls to go extremely high. They're the former neutrals who will become bulls. The bears will go much lower. The market is going higher. The technical monetary conditions now, by the way, it just started today with the debt ceiling being lifted. Treasury resumed selling bonds. We had 40 billion of 2-year notes sold today. And as I said, once that debt ceiling gets lifted, that's the top in the bond market. It is the bottom in yields. We might get a pop next week when the Fed cuts rates. We'll get all the zombies. Oh, I'm going to buy the bonds now because they cut rates. But the rate cut by the Fed next week, if that happens, and I do believe it will happen, but there are some people saying it won't happen. And I said before, I don't think fundamentally from an economic point of view, an economic argument, I don't think it's really justified for it to happen. But we're talking about the Powell Fed. I don't think Powell knows what he's doing. I think he's, and I've said this, I think he's the worst Fed chief since Volcker. He's looking at the markets. He's getting freaked out by Trump, and the guy's just jumping like skittish, very, very nervous. So he's looking at the markets, I think. And the rest of them on that FOMC, they're all auditioning for Powell's job, hoping that Trump will dump Powell and put in some guy like maybe Neil Kashkari, who was a total, absolute failure when he went over to PIMCO. PIMCO gave him this big fund to manage. Remember, he was on the Fed. He went over to PIMCO shortly after the financial crisis. He was managing big money that PIMCO just handed to him on a silver platter, messed that up. So obviously, where's he going to go? I think he tried to run for politics in California. That was a no-go. So of course, goes back to the Fed. And now he's auditioning for Fed chairman job because every single week, every single month, he's saying, we got to cut interest rates. Well, why is he saying that? Because Trump said you got to cut interest rates. Anyway, we get the Fed rate cut next week. Market goes much, much higher, folks. Much, much higher. Now, I have to talk about something else which I find to be very, very amusing. A friend of mine sent me a clip from CNBC. I don't watch CNBC. That's just garbage. That's complete garbage. So is Fox Business. But he sent me a clip of Stanley Druckenmiller. Some of you may know who Stanley Druckenmiller is. He's a big shot hedge fund guy, right? Ran money for Soros. Been running his own fund for years. But Stanley was going crazy. He was going nuts over yesterday's budget deal because he said, you see, they're spending more money. The markets are going to revolt at some point, at some time in the future. The market's going to revolt, right? Putting this kind of anthropomorphic spin on the market as if it's a living thing, like a human being. The market is going to revolt. All this crazy spending. Now here's a guy considered like the elite of the hedge fund people. Doesn't understand. Folks, there's 4 components to the economy. If you're going to define the economy as a mathematical formula, you got 4 ingredients. Or you could define it as a recipe. 4 ingredients. You got personal consumption, which is everything all of us spend our money on. You got business investment, which is everything that businesses spend their money on. You got government consumption and investment, which is what the government spends its money on. And you have net exports, which is exports minus imports. And that's always negative because the United States always runs trade deficits. So that's always a small subtraction. But the other 3 things, if you increase the amount of one of those components in that recipe, namely government spending, you increase GDP. And when you increase GDP, that additional spending, a good portion of it flows to corporate profits. As a matter of fact, 40% of all government spending flows to corporate profits. And when corporate profits go up, guess what happens? The stock market goes up, right? What are stocks? They are shares in businesses. People want their companies to earn more money because that flows to them ultimately either as higher dividends or higher stock prices. Here's the elite of hedge funds. Oh my God, the government's spending more money. The market is going to revolt at some point down the road. At some point it's going to revolt. We're going to have a revolt. So folks, this is the problem with ignorance. So it's pretty clear that Stanley, you could define his career as being more lucky than smart. Right? He got hooked up with George Soros. That's already big luck. Every time I heard this guy speak, he is so out of paradigm. He is so wrong. So it is a mathematical certainty. I will tell you this, and I'm speaking also to my people, my followers, my subscribers. It is a mathematical certainty that the losses of Stanley Druckenmiller, will flow to the profits of our group because of our knowledge, our superior understanding, our information. And there's many anecdotes I can, bring up. I'll give you one. Back in the 90s and early 2000s, the biggest Forex hedge fund in the world was FX Concepts, run by this guy, John Taylor. Biggest in the world. Multi-billion. All the institutions put money with this guy. And I remember during the financial crash, or shortly after 2008, 2009, when the Fed started to engage in all of its extraordinary monetary measures like 0% interest and quantitative easing, Taylor said, the dollar's going to crash, it's going down. Now you may recall in 2009, I made a video saying the dollar was on the beginning of a major bull trend precisely because of those extraordinary monetary measures. Well, you want to know what happened? FX Concepts blew up. The largest FX hedge fund in the world liquidated, blew up, lost everything. Why? Ignorance. Dogma. Wedded to some flawed dogma. Can't do it. Stanley's going to go down the tubes. Our people, my people, are going to accumulate what he's losing. He's ranting and raving because he does not understand. That comes from fear. That comes from uncertainty. That comes from not being able to kind of square what is happening with the paradigm that exists in his head. We don't have that problem. The only problem any one of my people might have, and the smart ones are working on it every single day, is honing their mental game. As far as information, as far as knowledge, as far as understanding, we got all that. Pitbulleconomics.com. Sign up, 30-day free trial, MMT Trader. Bye.